Greetings. This is a work on forex, stock, crypto, options, and all chart related trading. It is done by Twegbe Ehizoge. Today, we're going to talk about news in trading, trading the news, how to trade the news and make consistent profits. You're advised to like, share, and subscribe to this podcast to encourage more. So, trading the news is a fundamental part of forex trading or stock trading or any chart related trading. So, it represents a core aspect of fundamental analysis. In fact, there is a fundamental force behind technical analysis of price movement. We are used to technical analysis, and that is what we see in the chart. These are technical analysis. But there is a fundamental force that is responsible for these movements. And that force is called news. If there is no news, the market would hardly move. It is the fuel that keeps the market going. We trade news to make more money because major movements are seen during important news. However, many dealers widen the spread during news times, and so trading costs are increased, executions are delayed, and slippage get filled at a far different price. So it is difficult in finding the right direction during news period. Because of this demerit, trading the news requires more practice and always have a plan in mind. Because of this demerit, news require more practice and you must always have a plan in mind. I have to repeat that again. You must always have a plan in mind. So let us now look at the most important news to look out for. Not all news are important anyway. There are some that are fundamentally important and that they move the market extremely well. US news is the most important news because they have the largest economy and the US dollar is the world reserve currency and 90% of all forex transactions are done in US dollars. So this is why the US news is the most worthy news. Now that we know that the US news is the most volatile, the most worthy, and the most effective news to look out for, let us now look at the most important news that is released in the US. Number one most important news is the NFP. The NFP stands for non-farm payroll. It is released on the first Friday of every month, precisely at 1:30 GMT or 1:30 Nigerian time, as the case may be. And it moves the market with an average of 145 pips within the first few minutes it is released. So you are advised to watch out for this news and trade it. Another important news to watch out for is the FOMC. The FOMC represents the meetings of all central bank governors. This moves the market with an average of 65 pips. Another important news is trade balance. The trade balance moves the market with an average of 70 pips. Another one is CPI. And this moved the market on average of 65 pips. Another one is retail sales, and it moves the market with an average of say 78 pips. These are the most important US news. The question to be asked now is that where do we find this news? If you wish to find this news, just go to Google and Google forexfactory.com. It's a very important news site. And this is forexfactory.com. These are the various news for today, for example, 1st day of October. As you can see, it is released every day. You can see the time and the currency it is likely to influence. You can see the color. This yellow color represents not too serious news, not a serious news. While this other color represents, should I call this purple? Sorry, should I call this orange? It represents mid news. While this red represents very, very serious news. You can see the CPI and the core CPI news slated for today. You can see other important news. So any news that has red on it means it's a very, very important news and it's going to move the market. So what you do is at that time that the news will be released, you have to pay more attention to the market because you're going to see movements in the market. So other peak movers apart from these ones I've just mentioned are inflation reports, central bank talks, war, natural disaster, political unrest, elections, and even stock news. These are capable of moving the markets, and they are often read news. So news, like we have earlier said, brings volatility and more trading opportunities. More so with highly liquid pairs that are linked with the US dollars. And the most important pairs to look out for are, for example, Europe USD, the Great British USD, the US, let us go and see some of these currencies, the major currencies. The Australian dollar versus US dollars, the European, the Euro versus USD, USD versus Canadian dollar, US versus Japanese yen, and Great British pounds versus US dollars, and all dollar related pairs. So those are the most volatile and sensitive currencies, and they are highly volatile during this news. These are the currencies you have to pay attention to. It makes a lot of sense to stick with this pair because they have the most liquidity and they have the tightest spread. This is so because a lot of brokers increased their spread during news time. But because naturally these US tight currencies have very limited spreads, it makes a lot of sense to stick with them during news hours. So let us now look at ways to trade the news. There are two major ways to trade the news. We have the directional bias and the non-directional bias. What do I mean by the directional bias? When you expect the market to move in a certain direction at news release based on forecasts made by analysts, So that is what we call the directional bias. If you look very well, we see at the right, extreme right corner of this forest factory, you see various forecasts made by analysts. See, for example, retail sales was predicted by analysts to be 0.75, for example. So you can, if you are so convinced with the analysis, with their predictions, you can decide to stake for it. Take for instance retail sales. Let's go through it again. Say core CPI, you see the actual figure, but see the forecast was 2.7. The forecast was 2.7. The previous was 2.8, but the outcome was what? 2.7. So if you have gone by the predictions of analysts, that is what we call the directional bias. When you expect the market to move in a certain direction based on forecasts made by analysts. What about the non-directional bias? Yeah, once the market moves in either direction, you have a plan in place to enter that trade. You don't have any bias as to which direction. In other words, you cannot tell which direction the market is going to move. What you do in this case is what we call straddle trading. By straddle trading, I mean you place a trade on either side of the divide. If the market is currently at this point, you can place a buy order at a price above the current market price shortly before the release of the news, and you can place a sell order at a price below the current market price. And if the market move in either direction, it will pick your trade. The non-directional approach could involve straddle trading. In other words, trades are placed in opposite direction at a respectable distance from the breakout range of price action before the news report. And if the market happens to break out in any direction, it will favor either your upside or your downside. So that is that about news trading. Thank you very much for being a part of us today. You're advised to subscribe to encourage more broadcasts. We have a lot of lectures that will enhance your trading. So go through our other broadcasts and get educated. Thank you.